Friends, hello everyone, how have you been doing? Welcome again to my YouTube channel. This time let's talk about risk tolerance in a foreign exchange market and try to choose a strategy suitable for it. And in addition to theoretical knowledge, you'll see how binary options trading takes place in reality and in what situations I open deals. So watch this video till the end and you will learn a lot of interesting things. In the description below this video, you'll find a link to my Telegram channel where you can ask me any questions you have. Where you'll also find a link to my private Telegram channel where I share my daily trading signals. And I also run weekly marathons to help you increase your deposit from $150 to $5,000, guys. This happens every week, so make sure to join this marathon. And in addition, if you write me personally on Telegram, you will get a link to sign up for PocketOption with a gift deposit 50% absolutely free as a nice bonus. So now let's move on to PocketOption and let's get started. So the trading limit has already opened a chart of quotations of the exchange currency pairs Swiss franc, Japanese yen, the profit of which is 92%. And this is the maximum possible profit from our broker. Let's start trading and open the first deal to increase by $300 for 1 minute. It's clearly visible that a few minutes ago the price has increased significantly. At the same time, after the slowdown in growth, there was no pullback, from which it can be concluded that the uptrend hasn't ended yet. There were also signals from our indicators about possible price increase because the Williams indicator line, being in the overbought zone between 0 and -20 levels, continued to move up. So now we can start a conversation and let's move on to today's topic. So risk tolerance is an acceptable level of loss of the trading system to which the trader consciously goes, counting on potential profit. Assessing your own risk tolerance is an important stage in the development of a trader because it allows you to determine the strategy which is right exactly for you. So meanwhile, the first transaction is completed and brings us $276 profit. But it was exciting. Let's continue the conversation. The first question that traders ask after studying the theory of the foreign exchange market is the search for a strategy. Most beginners are interested in intraday trading, deposit overlooking, scalping on M1 to M15 time frames. However, trading theory recommends analyzing and building strategies on higher time frames because they smooth out the noise of currency fluctuations and random micro trends that are present on minute and hour candles. Despite this, we can open another deal on a 1 minute time frame for a decrease, again at $300 for 1 minute. This time the Williams line came out of the overbought zone and began to decline. At the same time, there was a decline in the quotations of our trading asset. Such a movement gave us a signal about a possible continuation of the price decline. We observed the transaction and return to the conversation. Intraday trading is attractive because it makes it possible to make daily profits, but in practice traders can lose their money. Emotions, psychology, and discipline are the first things that are called as reasons for losing an account. In reality, the main reason lies in a trader's resistance to risk. Understanding their own tolerance for losses allows beginners to avoid losing their deposit. Now let's pause because our deal was completed successfully and brought in another $276. Really nice. So we continue. Risk tolerance can also be the key to successful trading on the foreign exchange market for a professional trader. Changing the strategy to a less risky one can relieve a significant emotional burden, give more time to analysis, and ultimately increase profits. Do not forget about trading. We see that the price decline continues. So we open a new deal to decrease by $300 for 1 minute. Everyone also took into account the data from the Williams indicator. Its line continued to decline, giving us a signal about a possible continuation of the decline. Let's get back to the conversation. Risk tolerance is an acceptable overall level of loss of the trading system to which the trader consciously goes. The amount of account drawdown directly affects trading decisions and results. By choosing the wrong strategy, a trader with low stability will not be able to follow its rules with all efforts to observe discipline. A risk-prepared trader who doesn't doubt the profit potential of the strategy or even knows about the inevitability of draining the deposit sometime during the trading process withstands abnormal drawdowns. And now we look at the chart. Expiration has ended and $276 are replenishing our balance. So let's move on. A trader should understand that there is no universal approach to determine acceptable risk, since this is purely personal decision, which can also change for a number of different reasons. Sustainability is influenced by the level of finance, knowledge, personal circumstances, greed, success, and trading failures. A long-term positive result can make a trader forget that strategies merge all the time due to trend changes and volatility. Sometimes it's difficult to force yourself to optimize a once profitable algorithm. It is easier to believe that the current loss will soon be replaced by profit or vice versa. Large losses force the trader to trade with high risk in the hope of recapturing the deposit. Now we'll open another deal for a decrease of $300 for 1 minute. I see that the downtrend continues, so we will not miss it, so we'll follow the trend. Let's return to stability. It is impossible for a beginner to understand his own pain tolerance of loss at all. It should be noted that there is a set of initial steps and general recommendations that will help in determining the risk tolerance. So why should they be adhered to? In order not to lose the deposit and save yourself from unnecessary emotional worries. First, the trader must decide what income he expects to receive by trading on the foreign exchange market. How much money can he spend on this first deposit? Will there be an additional attempt to make a deposit after the drain, and what size? How will this affect your personal financial situation? Let's continue in a second. And now we see another completion of the transaction, and they're already familiar with $276 sent to our pocket. So thinking about a backup plan and additional funds can increase risk tolerance. This factor should be taken into account by the trader by reducing the initial investment amount. The first deposit, as a rule, is completely lost by beginners, but they do not pose risks of amount 100% probability of losses. Wherefore, the very first installment is always overstated in size. So the quotes are declining, and we're open another deal for a decrease at $300 for 1 minute. It's clearly visible that the decline continues, so we're following following the trend again. Let's return to the topic of our conversation and note the next step. Determining the risk tolerance. How much profit does the trader expect from the invested deposit? If a trader expects to double and triple investments in a short period, when he cannot avoid large drawdowns, a beginner should be ready to lose half of the deposit in a short time. If losses lead to non-compliance with trading rules, it's better not to try to cultivate the discipline of transaction. You can simply moderate your appetite for the expected earnings and focus on a conservative trading approach. Let's pay attention to the deal. The price has dropped well, and on this we have earned $276 again. So, continuing the conversation, we move on to the third step. The trader shouldn't rush to make the entire planned deposit and choose large amounts of transactions. The rush to earn money is a sign of greed, and this feeling on the stock exchange always leads to poverty. Invest a small percentage of your savings set aside for stock trading. The first result will prove or disprove the trader's ideas about the profitability of the strategy. As successful transactions grow, gradually increase the deposit, but only after evaluating the reaction to the resulting loss. So the trader will understand what percentage of drawdown doesn't affect trading decisions and what losses make mistakes, violate the rules of the strategy, and lead to emotional discomfort. Let's go back to trading and open another $300 drop deal for 1 minute. Despite the decrease in the activity of the declining quotations, the price still cannot turn around. I made this conclusion from the upper shadow of the candle. Let's check if I'm right, but for now we'll continue. It's important for a trader to understand, remember, and evaluate the emotional reactions to losses and profits. Following these simple steps, the trader will be able to determine his risk tolerance more accurately, make the necessary changes to money management, or even radically change his trading strategy, taking into account individual emotional background, trading style, and financial goals. Of course, a trader will have to choose several types of strategies if he wants to take into account the risk tolerance factor. So now we look, the deal is coming to an end, and we have earned another $276. I had to work again at the end, but everything ended well. But along with this transaction, today's trading session is coming to an end, and the time is coming to sum up the results. So today we've made 6 successful transactions with a maximum profit of 92%, and at the time with minimal risks that were less than 3%. On this we were able to earn $1,656, spending only 9 minutes of our time. Understanding risk tolerance is the key to successful trading in the foreign exchange market. Having assessed this level of acceptance risk and developed a trading strategy corresponding to it, a trader will be able to radically change his approach to trading on the stock exchange and receive higher profits. So I hope this information was useful for you, and it will be helping for you to earn binary options. And after all, only practice can teach you to understand the market. So, but remember, if you don't have enough experience, then before opening a deal, you need to carefully assess the current market situation. In addition, it's necessary to use indicators, the signals of which you understand, because they reduces risks and allows you to make a profit over a long distance. So I would like you to continue trading binary options because only here the analysis methods are not complicated at all. So guys, don't forget that in the description below this video you'll find a link to my Telegram channel where you can ask me any questions you have, and where you'll also find a link to my private Telegram channel where I share my daily trading signals. And I also run weekly marathons to help you increase your deposit from $150 to $5,000, guys. This happens every week, so make sure to join this marathon. In addition, if you write to my personal Telegram, you will get a link to sign up for PocketOption with a gift deposit 50% absolutely free as a nice bonus. So dear friends, this offer is really interesting and I hope that you've made the most of this video. So guys, thank you for being with me all this time. Thank you for watching this video till the end. I hope you like this video and you don't forget to subscribe to this channel and click on the bell so you don't miss anything interesting. That's all for today, guys. Good luck with your trading sessions and see you in the next one. Bye.